Hey everyone, Carlos Vargas here. Thank you for visiting the firsttimehomebuyertools.com website. Our site is a place where we would like to share some amazing loan officers, real estate agents, closing attorneys, home inspectors. So if you're thinking about purchasing a home, refinancing a home, hopefully you will connect with these professionals that you're seeing me interview. My guest today is Paul Rego for Mortgage Master. Paul, thanks for coming out.
Thank you for having me.
We appreciate your time. Could you tell us a little bit about you and your business?
Sure. I've been in the business about 15 years now, and it's certainly a business that has changed. More recently, in the last few years, I would say in the last 4 years, I've been in it for 20 years.
Wow.
But it's been a great business. It's a fun business, and I enjoy certainly working with clients, both new and repeat customers are always fun to see people evolve as they do over their lifetime.
Great. What made you get into the business? What made you move into the mortgage business?
I had actually been in the corporate world of financing many years ago.
Okay.
Prior to doing this, and I just found that being on the business side of the world, I was much better in a person-to-person environment.
Okay.
So it somewhat haphazardly bumped into someone that I had known who had also left the industry I was in at the time, and it just seemed like a great fit, and I honestly have not looked back.
Great. Tell me about one of your successes, something that you helped somebody get through a mortgage that they perhaps never thought they'd be able to get through.
That's a great question because that's almost a weekly occurrence these days.
Good for you. Congratulations.
One that I think is really interesting and not something that you hear much of these days. A lot of people have heard of FHA loans.
Sure.
It's been around since the 1940s, great loan for the right situation. But I had a client, actually a realtor, who owned half of a duplex. So we would call it a condex in today's world. She owned half and was listing the other half of the property. Had a client who had, within the last few years, had suffered a short sale, bankruptcy, and that type of thing. So it impacted how they needed to be financed, not necessarily the property. So in this case, they needed to do an FHA loan. The problem is those projects, as we call them, whether it's 2 units or 200 units, it's still considered a condo. And under FHA or HUD rules, the project needs to be approved.
Okay.
So while it is a 2-unit property, most people wouldn't think of that as a condo, but it really is. So it needs a lot of the components and the bells and whistles. So they're actually closing tomorrow, funny enough.
Oh.
It went amazingly smooth. We have to work directly with HUD and do the project approvals. So it was definitely a feel-good case where these weren't younger people. They had suffered something financially in their life that really shouldn't happen to people but did.
Yeah.
And they just wanted to buy a home again.
Oh, that's great.
And this was a nice success case. It was more work than a traditional loan, but just wonderful people.
Yeah, that's great. Yeah, that sounds like a great feel-good type of situation, right? Especially if you get those on a weekly basis.
Oh, it's amazing how the behind the scenes that goes on with people.
Sure.
We get really entrenched in their life.
Yeah.
Not just their financial life, but also what's going on with them personally. Sometimes they're all good, and sometimes you deal with the muckiness of people's lives, and you have to help them go through that.
Right. We all have stories.
Right.
We're not all plain vanilla. I mean,
there's always a story.
No matter, right. So,
Right.
So tell me, if somebody is looking to purchase a home, right? When should they get the mortgage professional involved? What, in your opinion, is the best time?
I liken it to tax planning. So the sooner you can talk to your CPA or you're forming a business or something, in some cases there's a time duration there that needs to happen or transpire before you can do some tax planning. It may be 2 or 3 or 5 years out when you're talking to your CPA about changing your business.
Yeah.
Home buying there's a lot of similarities now between the tax code and mortgage rules.
Okay.
So the sooner you can speak to someone, the sooner we can look for those trapdoors. We can figure out what's going on in your life. Maybe you do qualify today, and that's great, that's wonderful, and you're off to the races, but maybe it's going to take 6 months or a year before that can happen.
Well, okay.
Maybe you just open your own business. That opens up the proverbial can of worms and how you're going to income qualify.
Cash flow, that type of stuff, right?
So those are things that the sooner we can touch base and cover all those issues, it really makes a big difference.
Great. And so they should reach out to the professional before they reach out to the realtor, is that, or kind of all at the same time, or should they find out how much they qualify first, right? It's kind of that pre-qual letters that everybody goes looking for?
Right. I would say if they can get their ducks in a row,
Yeah.
their finances in
Yeah.
a good place, know what those are, and then be able to put that behind you.
Okay.
Because focusing on finding a home, especially in this current environment, is so important, and you cannot be doing both of those at the same time.
Great.
Most people these days are very busy, they don't have room in their life, so we try and wedge in and
Yeah.
get some things
Yeah.
done. If you're trying to do that while they're doing other big things at the same time, it just creates a lot of stress. It'll still happen, it'll still get done,
Sure.
but we want to do it in a methodical method so that they're happy at the end of the transaction.
And I'm sure that you can help them get organized financially, as right, because there's going to be
Right.
documents that you are
Mhm.
going to need, right? So if they're scattered all over the place, at least you can give them some sort of the route to get everything together, right?
Right.
Or the guide.
Generally, once I first talk to a client and we sit down and we chat on the phone, I'm really just trying to get inside their head and figure out what their experiences are, what their expectations are. From there, whether we're meeting or contacting, however that's happening, I send them a couple of documents.
Okay.
And one of those I affectionately call my document checklist.
Hmm?
And it's the basic stuff.
Sure.
But it's 75% of the transaction. And,
Oh, wow.
and I do it in a checklist manner, so literally, first one is 30 days of pay stubs. And
Yeah.
just follow this and check them
Right,
off as you
right.
go down. I have found that far better than people thinking about it or making it up or sending me some things and thinking that that's what I need.
Yeah, yeah.
Don't send me anything more than I'm asking
Follow
for.
the list.
Follow the list.
Follow the list.
If you follow that, your life, my life, everybody's life will be much better.
Smoother.
Much better.
Transaction goes a lot better.
It really does if they just follow there is a method to the madness. Sometimes people will provide things to me that I just don't need.
Yeah.
Or want to give me additional assets or this account or that
Sure.
account. If I don't need it, it puts more stress on the client. And once I see it, once I document it, now
Right.
there may be other pieces of that I have to document.
Right. So,
So-
opening up the closet a little bit might not be a good thing.
Right. My job is to make everybody's life as easy as
Sure.
possible.
The transaction goes smooth.
Yeah.
Is there something that you know today that you could share with us that you wish you had known before you purchased your first house or condo?
I would say, in today's environment, people need to work with people that I would say number one, are referred from trusted resources. I think that's really important because to the consumer, a bank, a lender, a credit, they all look the same to them. Just
Yeah,
like realtors
yeah.
do, just like insurance people do. They
Sure.
all look the same.
Sure.
But if you said to someone in their work environment, if there's 20 cubicles and you work there every day, you could probably tell me the person who's the best person in that room because you work alongside
Sure,
them. So
yeah.
it's kind of the analogy that I use. So getting a referral from an insurance agent or a realtor is usually a big step up because that person hasn't just closed one loan with someone, they've closed multiple loans. So
Okay.
there's a history there.
Yeah.
So I would say that's probably one of the most important things right now in this environment, just understanding who you're talking to,
Referrals.
but also being comfortable.
Okay.
Many times we're kind of behind the veil and people
Sure.
really aren't comfortable in just having a conversation or explaining what happened in the past. If you're not comfortable with that person, as good as they might be, if you're not connecting with them,
Right. If you're not a good fit, you're not a good fit. You need to move on, right?
you need to move on. And
It's
that's,
hard. It's hard to figure that out, right?
It's very hard
To let go too.
to let go of that information,
Yeah.
but to be comfortable enough to just get all of those issues out on the table because no one likes surprises.
Right.
And a big part of my role at the beginning is to kind of look downstream for those trapdoors
Sure.
and make sure that, okay, is this happening? Is that happening? What happened here? What happened there? And we're just uncovering things that we know are going to be issues when the file gets to underwriting.
Right.
So let's cover those issues now. Maybe they're not game changers,
Right.
or maybe they are. And you'd much rather know now than halfway through the process.
And prepare for it, or back out of it if it's not going to be a doable
Right.
thing. Yeah.
Yeah.
What's with so many different mortgage programs out there? What's a realistic down payment? If somebody's looking to jump into looking at home and their credit is good and they're able to qualify, what should they be thinking about as a down payment?
For most people, in fact, that's a funny question because a lot of people nowadays still think you need 20% down.
Right. Right.
That's kind of the canned phrase, and I'm usually the first one to say, yes, that is an option. You can put
Yeah.
you can put down whatever you want to put down,
Right.
but approach it a little bit more financially sound, in a sense that if 20% down is every penny you have in the world, maybe you should go to 10% down, or maybe even 5% down,
And an
and leave that
emergency
money
fund.
liquid,
Yeah.
have an emergency fund,
Yeah, good
talk to your
point.
financial planner.
Good advice, yeah.
All these moving parts
Yeah.
are critical, because while you may now own a home, you've sunk all your money into it, you can't get it back out. So, those are some of the moving parts. There are 3% down programs available for people, both through conventional Fannie Freddie business, mass housing, is another byproduct of that. There is 100% financing under a couple of programs still available, VA specifically. I do
100%.
100%.
Wow.
VA loans are wonderful loans. They're my way of giving back personally. If I deal with a veteran,
Sure.
I usually don't charge any closing costs. I do what I can to give back,
That's great.
honestly, for their service to the country.
Sure.
So it's a wonderful loan. I would like to do more, but I do
Yeah.
quite a few of them. And then there's USDA, which is another potential option for people. But all of those loans, as you start to reduce down payment and do other things,
Mhm.
you start to increase the probability of trapdoors along the way.
Okay.
And that's probably the biggest thing. You put a lot of money down, you have great credit. Not that they're not looking at all these pieces, they do in every loan, but there's more things that they're going to
Okay.
look at
Right.
as you
So-
reduce.
Documentation, a lot more stuff needs to come into play.
Right.
Yeah.
So as long as you're prepared for that and you
Yeah.
understand it, and you're a typical first-time buyer, and 3% is coming from your 401k, all of those things are pretty typical nowadays.
Sure.
But they also need to understand upfront some of the dynamics and things that are going to be required of them to get through that process.
Maybe sometimes it's not worth it just to move to a little bit more money down or something different.
Sometimes
Yeah.
there's an argument. It's funny, there's an argument both ways. I will have people who put 20% down, and I'll show them a 10% down, no
Yeah.
PMI option, which is sometimes better and it keeps them more liquid.
Great.
I'll have someone that wants to do a USDA, can't find a property that's eligible, but they have access to their 401k, gifts,
Yeah.
they have money liquid, and you can kind of cast the difference to people.
Sure.
And show them, yeah, that's an option, but maybe this is a little bit better way financially.
Great. Somebody's been in the home for a while,
Mhm.
and they hear about all these great interest rates out there, and they keep going up and down. How do they know when it's time to refinance? And I know if the interest rate goes down 1/4%, maybe that's not it. But if it's down 0.75%, 1%, when does it make sense to refinance?
It used to be 15, 20 years ago, people would say, oh, 2%. And rates dropped 2%.
Wow.
Well, that was an environment when rates were 18% and they came right down, so it was easy to drop down 2%. Most people today, I would say, in their own mind, is 0.5%.
Okay.
So if rates go 0.5%, they're feeling good about it.
Yeah.
1%, they're ecstatic.
Yeah.
But there's a lot of dynamics in play there. Do they have PMI? Can they now get rid of it? So PMI is a big cost factor.
Sure.
If they're in an FHA loan and they want to roll out of that loan, sometimes the rate is only part of the picture when people are doing refinances. It's very, one of the things that I truly love about the business is every situation is different.
Wow, it's all unique.
And it's really very dependent on the needs, and then coming in and trying to fashion a solution around that.
Sure.
It's not just, oh, I want to drop my rate and save $300 a month. That's great. What would you do with that $300?
Right.
Would you take that money, put it back in, pay off your loan
Yeah,
sooner?
yeah,
Would you
yeah.
give that money to your financial planner and invest that money?
Right.
Those are conversations that I don't think take place enough
Right.
with people.
That's
It
true.
really should.
Right.
Because when you can show someone that maybe that $300 you split and pay $150 a month, and all of a sudden you pay off your loan 10 years faster.
Right.
10 years without a mortgage payment.
Yeah. It's a lot of money.
That's a lot of
Not
money.
savings.
A lot of money, not just in finance costs, but just imagine not having
Sure.
a $1,500 or a $2,000 a month payment
Yeah.
for 10 years.
Yeah, that's great.
That's a
Certainly
significant
give somebody a better lifestyle at that point. in their
lifestyle.
life,
They
right?
can retire sooner, defer college
Yeah.
expenses. There's an amazing
Sure.
number of things
Yeah.
that you can do just by turning the lens a little bit.
And hopefully you're sparking, the little that little voice in the back of their head that says, wow, we can buy all this new stuff. Hopefully you're saying, maybe you shouldn't be thinking about buying the new stuff and let the economy take care of itself. You should take care of your family. That's where a lot of folks, they just throw it back into new gadgets, and it should be a use of savings, right?
I would say what's interesting now,
and I'm guilty of that as well.
Everybody.
Yeah.
Everybody, you get a little bit extra money, you get $20 in your pocket and all of a sudden it's
Yeah.
gone. But
Yeah.
Dunkin' Donuts folks.
Yeah.
So there's a lot of dynamics that happen there, but stepping back from it and just trying to be reasonable and seeing how much they're spending, how much their income is.
Sure.
Most people have the same amount of income every month. Adding $300 there isn't really gonna make a huge difference, but what can they do with it in a smart way?
Sure.
That can have some long-term benefits. And people today, it's amazing, you cast back to 5 years ago or 8 years ago now, are much more conservative minded because they've seen either what their parents went through.
Right. The
So
struggles.
people, first time buyers of today
Yeah.
aren't pushing,
Yeah.
they're trying to get into lower payments. They don't
Sure.
want to live for the house, all of these
Sure,
things
yeah.
you hear. And that's nice to see.
Yeah.
One of the dynamics that's in play right now related to that is we pretty much know rates at some point are going to go up,
Sure.
and we know values are going up.
Yeah.
So that's one of my concerns right now for the first time buyer folks is the market is moving away from them.
And they're being pushed out of the market even further. Yeah.
Right. So
Yeah.
that's going to be harder for them to find homes.
Sure.
Which puts a lot of stress on them. At this space and time right
Sure.
now, they need to, if they're ready, willing, and able. Now is just the perfect time.
Yeah, great. Did you read the article? I think it was in Mortgage Grapevine about Consumer Reports said that you shouldn't go through a mortgage broker. Did you read that article? Do you have an opinion on that article? I'm sure most of the folks in your professional.
What's sad is I'm a subscriber to Consumer Reports.
We all are, I think. We all are. Absolutely, we all are.
I rely on them when I'm buying a car.
Yeah.
I buying a washer and dryer. I go there. So when that article came out, and there was also an article about realtors not so long ago that was not very favorable.
Okay.
I
missed that one.
That was, and there was some pushback from NAR that I'm not sure where that went, but if you looked at the three places that people can get money, and I tell all my clients this, you basically have your local bank, credit union, direct deposit. They're lending depositors funds. You go in, you put $100 in, that money's going out to someone else.
Sure.
There's that environment. There's the lending world, which kind of comes in a couple of different flavors. It may be a direct lender, or a lender like us, we're direct, but we also have access to a bunch of other people.
Sure.
It could be lenders, banks, and then there's the mortgage broker world. Of those three people, the least qualified, which is very surprising to people, in a lot of different ways, from a compliance standpoint, from an informational standpoint, from an educational standpoint, I could go on, is unfortunately the direct banking channel.
Yeah.
And this is a byproduct of regulation, which we all hear about in compliance.
Sure.
But it's sad that channel has become the place where you hear most of the complaints from the consumer.
Okay.
The lack of training, the lack of qualification.
Right.
They're not licensed. So we go back to that same thing of you've got 24 people in your room, you're going to know who's the best.
Sure.
We work side by side with them.
Yeah.
We, on my side of the industry, we have to be licensed, we have to be FBI background checked, fingerprinted, exams, federal exams, state exams, we have to do all of those things.
Right.
And I applaud that, I invited that.
Yeah.
There's a cost associated to that, but we try to raise the industry from the ashes, basically. But all of these guidelines essentially left the people in that channel alone. They left the banking entities.
They weren't affected at all?
They were affected in a minimal way, in a sense that I'm not casting any disparagements on them or that industry, but we should all be held to the same standard.
Sure, absolutely.
If I have to have all these things,
Competition, right?
if my credit needs to be pulled every year, then everybody else's should.
Sure.
And there's an underbelly of that industry where if you've done bad things, well, you just go work on that channel now because you don't have to be licensed. What they've done is they've left that industry to police itself, to train itself, and the proof is in now. Public opinion, comments, questions, that's a problem. And they are doing some things to try and level that playing field. But at a bare minimum, if you're working with someone, and that may be a licensed person that works there, and that's fine, just make sure they're licensed.
Sure.
That should be a bare minimum.
And plus, so look for somebody who's licensed, but plus, as a mortgage broker, you're not trying to fit a square peg into a round hole, right? You've got many different avenues where perhaps the banker doesn't have as many, right? Or as many choices.
Right. One of the downfalls if you work for one institution is you have one set of rates.
Yeah.
That you basically say, here it is, do you want it? And you have one set of products.
Right.
And there's a word in our industry, it's kind of a dirty world, it's called overlays.
Okay.
So what that means is you may be ultimately keeping that loan in-house and servicing it, or you may want to sell it. So when they say they're selling it, all they essentially mean is they're selling it to Fannie and Freddie.
Sure.
So they write the rule book. They don't lend money, they just write the rule book and they buy the loans. So as long as you write it to their standards, you can always sell that loan. But what a lot of the institutions have done is kind of overlaid with their own more conservative guidelines. And it may be things that don't seem like a big deal, like we need another month of pay stubs.
Sure.
Or we need some reserves. But all of these things, when you start to compile them and add them up, they make the process more cumbersome. And when the end seller doesn't care about those things, but only you care about those things, then why are they there?
Right.
So it doesn't mean that those things, it's a separate conversation where they should or should not be there.
Sure.
And as an individual institution, if you're the local bank on the corner and you want to, imply your own regulations and things, that's great because you want to be more conservative to protect your borrower's funds.
Yeah.
You absolutely should be able to do that. But how does that impact the person that's going there to get a mortgage?
The consumer should know, right? Yeah. Right.
And they usually won't find out unless they speak to someone else. Or they'll find out after the fact that why did you jump through all those hoops and take all of that time to close or whatever.
Just wasted my time, wasted my efforts, right?
Right. It's become very much a global world in the world of mortgages. If you're doing a lot of volume, you can keep up with the regulations and the other things. If you're not, it's almost unfair to the smaller guy and even the mortgage broker. It really is unfair to them to try and keep up with all of this stuff. But to your point, with the numbers of products, you need to have access.
Sure.
For that guy that needs that $5 million loan, you need to have resources for that.
Sure.
Whether it be a lender or a direct bank, for that first-time buyer that's buying that $75,000 condo, you need to have places for that.
And you folks have places and avenues.
You need to have your own channel, but then you need to have all of these other resources that can fit the bill and find a client, again, that solution that fits that need.
Okay. And as we wrap up here, if somebody is looking to purchase a home in the next 30, 90 days, 6 months, what should they be doing? Is there anything that you can advise anybody? Somebody calls you and says, this is what I'm thinking.
I would say, and that's a wonderful question because we want people at the end of the process to be happy.
Sure.
That's ultimately our goal, whatever we have to go through to get them there. But they play a big part in that role.
Yeah.
It's not just us requesting things. I would say you must be diligent, stay in front of things, or don't let the process get ahead of you because it will very quickly overwhelm you.
Sure.
So you have to stay, step by step, take baby steps along the way. So be diligent, be organized.
Yeah.
Start collecting pay stubs, start collecting bank statements. Most banks nowadays and most people get their bank statements online, which on a phone, which is wonderful. It's great. But we, as the banking community, when you get a mortgage, still need the old-fashioned paper statement.
So you got to print them out.
Print them out.
Right.
Get paper statements. If you're moving money around, be careful, about doing that. So it's really, and I have this conversation with most of my clients, be diligent, be as organized as you possibly can, because your financial world is all up for grabs.
Organization
is key.
Okay.
If you're naturally an unorganized person, that's okay. A lot of us are. But in this span and time in your life, and literally there were studies done on this. The average person only needs to block out about 2 to 3 hours, and they could get us 90% of the way.
Wow.
But unfortunately, they don't know where this is, they're not sure where that is, so they put that off and they go off to the next thing, and then they forget about the other 2 things And it,
That's a pain.
it
Right.
makes it a pain for everybody. And I'm the last one that wants to be calling and saying,
Sure.
hey, you know, I still need this, and you forgot
Right.
about it. That's not the conversation
Yeah.
we want to be having.
Yeah.
So, to your point, being organized, staying on top of the process.
Yeah.
And if you have questions, get it all out on the
Ask
table.
away. Ask away.
Because it's very important that everybody is on the same page, and there are things that are going to come up later
Right.
that you don't necessarily, you know, almost unconsciously mention or think of,
Yeah.
but could impact the transaction. So just ask that question.
Just ask. And is there, and it's funny, is there any advice that you could give if somebody's looking to work with a loan officer?
Mhm.
What question should they ask? Should they ask about their company, about the LO itself? Is there
Right.
a few questions?
I usually volunteer that information to people whether they want it or not,
Yeah.
because I think
Yeah.
it's important.
Sure, absolutely.
Because in many cases they don't, if you don't know the question to ask, why would you even think of it?
Right.
So I volunteer that information to people because I feel it's important that they know who they're working with.
Yeah.
So at a bare minimum, we talked about the licensing piece.
Right. Yeah.
That's very important. Do a little bit of research online, you know, about the
Mhm.
company. Be careful about reviews because those can be static and you know dynamic too, and everybody's got an opinion these days
Sure.
about any organization. So you know those things, but you know ask around, check into the references again, you
Yeah.
know who they're dealing with. Many times, I think people are dull to we've got the best rates, we've got the best service.
Right. Right.
Those things they're going to hear from everybody.
Right.
But if you connect enough of the dots, or there's a missing dot along the way, or something that makes you feel uncomfortable,
Yeah.
or that person isn't calling you back for 2 or 3 days, you know what?
Learn from it. It's not going to get any better.
Is not if you haven't even engaged and that person
Right.
isn't even returning your call, which is
Yeah.
by the way the number one complaint in our industry, which is why I'll still call people back. It's 9 o'clock at night. I
Yeah.
will still call and say, you know what?
Yeah.
I haven't been able to call you sorry, but I'm just calling you back. Get that warm and fuzzy. You know, if you're comfortable and you can connect all those dots, you're probably in for a good experience. If there's some butterflies in your belly about some part of this, then just move on.
Just walk away.
Yeah.
Right. If something's telling you that it's not going to work or you're not feeling well. Yeah.
Right.
What's your favorite part of your day? What do you love doing the most?
I would say from 7 to 8 o'clock in the morning.
7 to 8.
Cup of coffee,
Cup of
quiet.
You really? Okay. Read the paper?
No, I've already read the paper. I'm already past that. What I'm reading is news from the overnight markets.
Okay.
Trying to kind of anticipate what might be happening that
Yeah.
day in terms of rates, and you're always looking for little niches along the way for people.
Sure. Yeah.
So that's probably about a half hour of that time just reading reports and things like that. I already have a plan for the day, but I'm trying to figure out what are the things that I need to interject throughout that day.
Impact your customers and clients. Yeah.
Those are things that I can get emails from people at any time during the night,
Yeah.
and I know if I'm going to be out of the office that day, then I need to either address them or get it to someone else that can address them if I'm going to be driving around all day.
Sure.
So
Sure.
that really is, I would say it's my favorite part of the day, but it's
It's the me time that allows you to focus on.
right. Allows you to focus, know what you're going to do for the rest of the
Yeah.
day, and just get and go.
What are you reading? What's on your nightstand? What's your favorite? You read
it's
fiction, nonfiction, business?
It's actually business.
Business.
I don't know if you've heard of it. It's called Mr. Schmooze.
No.
It was actually
Mr. Schmooze.
Mr. Schmooze,
Remember that.
and I believe the author is Richard Abrams.
Okay.
Just started reading it this weekend. I'm a little behind on my reading.
Yeah.
The title doesn't belie what it's really about,
Okay.
but it's a great book that was one of the coaches I was working with.
Oh, that's
referred
great.
it. So it's more of you know, how to connect you know, with people and stay in contact. And so the title is a horrible title.
Mr. Schmooze.
Mr. Schmooze.
Sure. Grabs folks when they
Everybody's got a
see
shtick
that,
or
yeah.
Mr. Schmooze.
Right. Right.
But the title catches your eye, and the 1 or 2 chapters I read this weekend, it was not what I expected.
Right. Okay. Good.
Good
Not you expected. Good. Good.
So far.
Good so far. Thank you for your time
Thank you,
today.
Carlos. I appreciate it.
Appreciate your time, you coming in. And I thank you for watching our video. If you know of somebody who's looking to purchase a home, or maybe yourself, or looking to refinance your home, hopefully you reach out to Paul, and he can definitely help you out. As hopefully you've seen that he's definitely somebody that you want on your team. Or if you know of somebody who could enjoy this video, pass our video on to them. I thank you for listening, and I'll see you again on the next firsttimehomebuyertools.com website video. Take care.
Thank you.
Thanks.